Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for June 13th, 2024. Well, yesterday we had quite a volatile ride as we were kind of expecting if you've been watching the morning prep videos. But this morning we have some interesting reactions to the Fed decision as well. So let's take a quick look. If we take a look at Asian markets last night, Asian markets were a bit mixed, mostly higher, with the Nikkei dropping 156 points and Shanghai dropping just ever so slightly. But we've got Hong Kong as the biggest gainer, up 174 points on the day, so kind of a mix. However, Europe this morning, after a nice strong rally yesterday, showing a pretty heavy reverse of that this morning, right across the board, with the DAX down 215 points and the CAC at the moment down 103 points, showing a little bit of that uncertainty after that FOMC decision. We'll have to keep an eye on that today. And then, of course, U.S. futures are mixed this morning, with the NASDAQ surging once again, up 110 here in the pre-market, with the Dow futures being down 137 and S&P 500 futures nearly flat. So kind of a mix going on here as this tech-led rally continues to surge after that Broadcom report last night. So let's take a look at oil this morning. Oil a little bit lower. If we take a look at energy prices here in XLE, you can see we've been moving in this downtrend, and we're just a little bit lower here today, with some worries on large crude supplies starting to build, so a little bit of concern on that. And then we've got natural gas just a little tiny bit higher this morning, trying to hang in there, only up by 3 cents. 0.3 cents. 0.03 cents, sorry. Not much going on there, but we've needed this kind of rest and consolidation here in UNG, so no big surprise there. If we take a look at precious metals, well, gold popped up big time yesterday on that drop of the dollar, and then as the dollar re-strengthened after the FOMC meeting, we saw the gold pulling back, and gold is also lower here this morning. At this moment, down $20 an ounce, with silver, copper, platinum, and palladium also lower this morning. So kind of keep an eye on that today as that dollar strengthens. And then if we were to take a look at our cryptos this morning, well, we've got Bitcoin a little bit lower here today, starting off the day down about $300 a coin, and a bit of a mix here in the cryptos today. So keep an eye on that, fluctuating as the US dollar is fluctuating as well. Last but not least, if we take a look at our bonds have been moving to the upside here this morning, just ever so slightly, but we've got the 2-year bonds back up there at 4.75%, 10-year is at 4.31%, and the 30-year is 4.47%. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. Let's take a look at these charts and see if we can gain a little information about how we may want to approach the market for today. Remember, we want to shake off that bias, and we really want to look at the charts for what they are, not for what we want them to be. Well, clearly yesterday we had a pretty rough day in the Dow. I had mentioned to watch carefully for the possibility of a whipsaw, and it's interesting that really that major whipsaw only occurred in the Dow itself. We gapped up here strongly. We came back up here and retested these highs in the chart, and then we pushed on down, leaving a nasty little, a nasty big bearish engulfing candle, or clearly a big dark cloud cover in the diamonds, and reconfirming this potential lower high here in the Dow, maybe showing us that a possible downtrend could be on the way here in the diamonds. Now, if the bears were to find an inspiration to the downside today, the critical area would be that follow through that would break the tail of that hammering pattern, would be a little bit on the critical side here for the Dow. So keep a close eye on that. Breaking down below here, we'll want to watch carefully if we start to lose that area, and then we could start coming down in here, seeing some of these gaps being filled and lower levels in the chart being sought by the Dow. Now, of course, the downtrend would be confirmed if we made a new lower low here, breaking on down below this area. So that would confirm our downtrend here in the diamonds. We'll want to be keeping an eye on that. After such a big day, however, to the downside, and the data that we have today, I would not rule out the possibility that those bulls will step on in here and push us back up to retest. Notice we've got this little upside going in here as well on that wedging pattern. So keep an eye on that depending on how that data comes out. Now, if the bulls can really get going here today, I'm going to be looking for that downtrend, a break of this resistance, and then we'll look at this stretching on up here and retesting this area here once again in the chart. Now, if we take a look at our SPY, certainly no particular worries here in the SPY. We popped up, left a little bit of a shooting star, little spinning top doji kind of candle up there with a big gap behind. And again, it's going to matter a lot whether or not we are going to be able to push on through to the upside or the downside. So the follow through to this candle is going to be really critical. Right now we're showing significant bullishness in the QQQ, and that's helping the SPY hang in here. We'll want to watch this. If the bears find reason for engagement here today, pushing down below that candle and dropping into that gap would be the worrisome part here, where we could fall back down in here to fill this gap. And once we do that, we'll want to be watching this area of price support and of course the trend to try and hold us as support. If we were to break down through here, of course that's going to create a little bit of concern in the market. Now, to the upside, we know that if we've got some good data here today driving us higher, well, we can certainly see we've got to break the wick of that candle there to hit an all-time high print. We continue to show all-time highs here in the SPY and blue sky above, so watch carefully if we continue to see that bullish push to the upside. And then if we take a look at QQQ also stretching higher here, the strongest of the day. We continue to see Apple and Microsoft dominating the index, really pushing to the upside. And as a matter of fact, if it wasn't for big tech, the tech giants, would be looking at something very different here in this chart. But that being said, blue sky above, looks like we're hitting new record highs here in the pre-market. If the bears were to find inspiration, well, we can see right here, pretty simply, a push back down to retest that low would be the first level of price support. If we were to break that, then of course we'd be filling the gap, looking for a gap fill in there, some price support right in here as we push down, and then of course the underneath side of there and the upside trend. All of those levels could potentially hold us, and right now we're seeing no evidence that the bears want to push any tech to the downside. If we take a look at our IWM, IWM also had a little bit of a rough day, but it still finished the day sharply higher. We ran up here and we tested this downtrend here in the chart and then pulled back into the gap. The good news is it did not fill the gap. The bad news is it still opens the door for that opportunity that we could continue to push this down, as we're seeing here in the pre-market, push this down for a gap fill. So if the bears were to engage, these levels right in here is where I'd want to be watching for that potential to find some price support. If we were to fill that gap all the way back down and lose that area, then I'm going to suggest we're going to come on back down and retest this low in the chart. Beyond that point, we once again would reconfirm the downtrend with a lower high after, a lower low after a lower high. So watch carefully for those possibilities. On the bullish side of things, if the bulls can find inspiration in the data today, and there's every reason to believe they could, then we would push back up, and I'd be looking for this area of resistance first in the chart. See if we can push back through there, and if we can, up through the opening price yesterday here in IWM, and then beyond that we'd be back up here trying to test this downtrend resistance line in the chart. Let's take a look at our VIX. Now our VIX just dropped hard. Once again, we gapped up and a little bit yesterday on the VIX and then continued to fall. So what we're seeing here in the VIX is we have no fear. No fear at all in the market. I think we're seeing some complacency here in the market, but we're also seeing probably the thinnest market I think we have ever seen in the history of the market. And what I mean by that, number of leaders in the market is very, very small. A tiny group of big tech giants are leading the indexes, while the majority of stocks continue to show a little bit of weakness here. So no fear, as long as tech continues to run to the upside. It'll be a different story if we happen to see tech stumble and start moving to the downside. So watch that carefully. But if we get good pricing data today in the economic numbers and earnings reports, then every reason to believe that we could come right on down here and start breaking down to new lows here, new recent lows in the VIX. Of course, if the bears were to find inspiration, it sure doesn't look like they have much energy to find that inspiration here. We're running in this downtrend here, maybe a push back up to test some of these resistance levels and perhaps that downtrend here in the chart. Breaking through there would be where a little bit of concern would come into the market. Take a look at our T20s here. Our T20s, kind of interesting on yesterday at the big gap up open. T2122 opened all the way up here in the bearish reversal zone, and then as we went throughout the day and we started to fade on the way back, well, you can see where we ended up here. We ended up about middle of the road here in T2122. So that's good news. We still had more stocks moving to the upside than we did to the downside yesterday. But at the same time, well, we're just kind of straddling the fence here at the moment. We've got about an equal amount of upside opportunity and downside opportunity should the bulls or bears find inspiration here on the day with that whipsaw really pulled this all the way back into that mid-range. So kind of an interesting price action day. And then if we take a look at our T2108, well, our T2108 had a nice improvement, but it faded quite a bit throughout the day on that pullback. We still have this downtrend in here, but the good news is we're holding some price support. We're still below our 50% area here in the percentage of stocks above the 40-day, but that was a nice little improvement, little W bottom or double bottom in here. We'll have to see if we can follow through follow through from here now with those bulls breaking that downtrend. If the bears were to take back over today, I'd look for a retest of this support area here in the chart, and breaking that would of course raise a little bit of concern. If we take a look at T2107, percentage of stocks above the 200-day, also nice little bounce back up here, holding that support, little W formation. Here we're well above our 50% area here in the chart, and a nice improvement yesterday. But once again, we have that little downtrend in here, and this did fade back as we whipsawed yesterday. So this will be really important on the data today, whether or not we'll have enough energy to break that downtrend here in that, continuing to push those stocks back above their 200-day moving average, or if we were to get some bearish news and slip back down toward here. And of course, breaking that low would probably raise some concerns that we may be moving toward that 50% of the stock. So watch carefully in T2107. And then this was really interesting yesterday. T2101, we saw yesterday weak breadth. Now, what was interesting is it was very weak in the morning. We actually had T2101 was down in here early in the day. And then as the whipsaw occurred, it actually improved. Very strange on that price action move in here. But what you can see is that situation where we have such a small leadership in the market that we're struggling to come up with enough breadth to really give us lots of confidence in that upside move. In fact, it reminds me of that situation where we're reaching a very extended point where something's going to break here in the market. We'll want to watch carefully here for that possibility. But if we can get some bullish news today and inspire those bulls, perhaps we can get a little lift here, pushing us back up in that breadth. We'll want to watch carefully for that possibility because we seem to be really struggling with it right at the moment. Let's take a quick look at our earnings calendar, our economic calendar here for today. Whoops, that's not what I wanted. Here's what I want. So on our economic calendar here for today, we'll want to take a look at that, and you can see we've got those jobless numbers here this morning. They are suggesting that our jobless numbers will decrease, come in at 222,000 from the prior 229. Watch that carefully today. Of course, this has been one of those problematic things. We heard Jerome Powell talking about this. Jobs market continues to be very strong, although we have seen unemployment tick up just slightly. We still probably need to see more weakness here in this to give the Fed cover to start lowering rates. So watch that carefully here today. And then we've got the PPI numbers. They're looking at the month over month having a pretty sharp decline from a 0.5 to a 0.1, but the year over year actually increasing to 2.5. So kind of an interesting mix in here, what they're suggesting in consensus. You notice that the ex-food and energy year over year, they're looking at that remaining flat. So watch these numbers today. They could certainly provide significant bullish response here today or bearish response depending on how those numbers were to come in here before the bell. Then remember, we've got a natural gas report later on in the day. We've got a couple of bill auctions. We've got a 30-year bond auction to be paying attention to, and we're going to start back into all of the Fed speak after the FOMC. They're out of their blackout period. We've got Williams speaking today, and then at the end of the day, we're going to have that Fed balance sheet. As we roll into Friday, kind of keep an eye on that. We've got import-export prices, consumer sentiment, and some Fed speakers in there past that Baker Hughes rig count. So keep an eye on those things as you plan forward. Let's take a look at our earnings calendar here for today. And our earnings calendar, well, we've got a few notables on here today that we'll want to be paying attention to. First off, we've got KFY we'll want to be watching this morning, getting a little bit of a bullish push here this morning. Looks like earnings are helping that out here. We've got Signet Jewelers, better get Signet Jewelers reporting today. Keep an eye on that. MD, can't type this morning, MDRX will be reporting today, and WLY will be reporting this morning. So keep an eye on those for those notable reports this morning. After the bell will be our biggest notable. Adobe will be reporting after the bell today, and that is the only notable this afternoon. Wind down this quarter of earnings. So how about we take a look at a few stocks that could be setting up for today? But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. And thank you so much for everyone who does take the time to do that. It means the world to me. You guys are awesome. Keeps me doing these videos, getting up well before the market. I usually am at my desk right before or right around 5 a.m. to start pulling all of this information together for these videos. So thank you for that kind and consistent support you guys are showing to the video. I truly appreciate it. Let's take a look at some stocks that could be setting up. And remember, guys, these are not recommendations to buy or sell any security. As a matter of fact, you need to do your own due diligence. Be very careful in this market. And remember that we have such a thin leadership that unless you're in some very specific stocks, you may have trouble getting stocks to really move all that much, because we're concentrating so much of the market energy directly into the big tech giants. So make sure that you plan your risk carefully in these trades. And remembering this morning, we could have more of that volatility with the jobs number and the PPI data that could whip us around here on the day. Let's take a look at a few things in here, and keeping in mind these are not recommendations to buy or sell any security here in the market. So let's take a look. You guys know that I've been kind of keeping an eye here on PayPal, and was looking for PayPal to maybe on a weekly chart make that higher low in here and hang in. And we had a good pop here last week that was giving me that idea that, hey, this is about ready to get going for a longer term trade. And then, well, all of this data coming out and bonds fluctuating the way they have has added some more pressure here. And now we've got basically a quadruple top up here in PayPal, and we're giving up that trend here once again with that whipsaw. And unfortunately, we're seeing a lot of volatility in the financials. Financials yesterday gapped up here on the day, ended up with a big old dark cloud cover, almost a bearish engulfing, and we're starting to see some follow through here to the downside. These higher rates are really starting to weigh heavily on our financials, so keep a close eye on that. And if you're looking for potentially some trades that could set themselves up, I would take a look at some of those financial, well, for example, like Citibank, that's set up short here. We've got Bank of America that is actually holding very strong. We've got JP Morgan in a short pattern. And then when we take a look at some of the pay systems out there like Visa, little questionable here on Visa. MasterCard holding in there in a short pattern. We see stocks like SQ holding in a potential short pattern in a downtrend. So there could be some short trades along that financial area. And then take a look at our KRE. KRE gapped up substantially yesterday, ended up fading all the way back down here We'll want to watch this carefully. Those regional banks are running into more and more trouble with the commercial real estate problems out there, and there really is that fear that we could see some bank failures here in the relatively near future as a result. So watch that carefully on those regionals. The other thing that we saw yesterday that was pretty dramatic was the big sharp decline yesterday that we saw at the open in our US dollar. US dollar dropping hard at the open here this morning, but by the end of the day it had rallied back up, and we had this fluctuation in here on the dollar. So interestingly enough, you can see that the bonds are continuing to move up this morning, and we're strengthening that dollar once again. That, of course, is going to have that negative effect on some of our commodity prices. So I would keep an eye on potentially some of those oil sector stocks. There are some reasonable short trades that are setting up here. This is quite a failure here of a good support area in ExxonMobil. And this failure pattern here looks like ExxonMobil is in a short. I would keep an eye on that. We still have those stocks like ConocoPhillips following this downtrend, looking like a potential short. I would be watching that carefully. Now, this is coming into some price support, but we've got overall an awful lot of weakness in some of these commodities. Take a look at GLD. GLD has been moving in this downtrending channel. We've got that failure up here by the downtrend. A follow through here today to the downside would certainly suggest that possibility will be coming on down to test the lower side of that channel as well. If we take a look at silver setting right here on this big upside trend, trying to make that decision, but you can see that follow through from that gap up and pull back here, starting to weigh on that here in the pre-market this morning, and that possibility that we could lose that upside trend here in silver. So keep an eye on some of those stocks. When we take a look at like Freeport in here, that big gap up yesterday, fading it all the way back, this will be really critical if we were to fail through those support areas here in the chart. Let's take a look at some of the tech sector. AMD was looking like just a couple of days ago it was going to fail this price support area here in the chart, and we did try to get something going yesterday, gapping up just a little bit, trying to get a bullish move. Once again, it faded back. I would watch this pretty closely. If AMD were to fail through this price support, I think there is a chance that could occur with that little bit of downtrend that we've got going here. Keep an eye on that. Look for that possible fade here in AMD if we continue to see those pressures building on this stock. Take a look at Tesla. Tesla had a good day yesterday, gapping up, and now there's news out that Elon Musk believes he's got his pay package that he's looking for in the as a CEO. So keep an eye on this big pop here in the pre-market on that with some follow through. So breaking through this downtrend, if we can hold this area up here for a higher low, then I would start looking for that next upside opportunity, perhaps along that trend, for that upside in Tesla. So keep an eye on that. Still liking this chart here in 3M, despite the fact that it's kind of slid beyond its trend in here. You can see we held just a little bit of a higher low, starting to move up progressively in this chart. This little rest that we had yesterday would be something I would be looking for, that opportunity then for that next potential move to the upside. Keep an eye on 3M. But I got to tell you, when we take a look at some of the defensive sector stocks, not looking so good in some of those. Tyson, rough day yesterday, pushing down. I see some of Tyson, Hormel setting up in a potential short pattern. Stocks like KHC, man, just getting hammered to the downside. We also had a bit of a rough day in some of the drug makers yesterday. J&J looking lower here yesterday and could potentially be setting up that head and shoulders type pattern, as you can see in here. That possibility, if we break the neckline of this, look for a little bit of short opportunity there in J&J. Take a look at Merck. Merck was up here at a high, but rejecting up here along this resistance. Keep an eye on that. We saw Pfizer having a rough day, showing a failure pattern from a double top. So those drug makers having a little bit of a rough time yesterday. So keep a close eye on that. So with that, everyone, I want to wish you all a fantastic day. Thanks so much for being here this morning. I truly appreciate it, for the support of the channel. You guys are awesome. Be safe, be careful, and I'll see you right back here bright and early Friday morning. And as always, wishing you all the very, very best. Take care, everyone.